today. You got Paul Smith over at 12 Rivers Realty doing our 12 at 12, November 5th. And we're almost done with the year. Got 10 months in the, pretty much got 10 months in the can at this point, and 2 months left until the start of 2026, which is crazy to think that we're like that close to hitting 2026. And man, a lot of stuff's been happening. A lot of, obviously there was voting that was happening yesterday, and it looks like Prop Q got shut down. For those that don't know what Prop Q was, City of Austin was going to try to raise property taxes significantly, to try to meet budgetary restrictions or whatnot. And man, it's tough because if you look at a lot of the line items, it was things that people are extremely controversial. And I really don't even want to touch on some of those things because they brought some up in the past and just didn't go well for me. So say all that to say, Prop Q did not pass. Property taxes, those that don't know, the state of Texas mandates that a city or a county can only raise their taxes, their budget 3% a year. And Prop Q was essentially trying to raise that substantially, I believe, by up to 20%. And it had to be voted on by the public. And the public voted, they spoke, and they said no to Prop Q. So glad that my property taxes are not going up. Being a part of 40-something properties at this point, I was disproportionately going to get fucked. So thank you guys for voting no on Prop Q, as now my taxes aren't going to go up as much. But I would imagine, they're just going to continue to try to increase the budget in some way to try to really kind of meet the demands of what's happening. As Austin becomes a larger city, we start to have larger city problems. And unfortunately, homelessness is part of that. So, really having to deal with that. Man, shout out. We got the ATX mayor up in here plugging his own property, 10101, which looks like binary. 10101 Woodhaven Drive, 78753, brand new remodel for sale. Guys, if anybody wants to check out this brand new remodel, hit up ATX Mayor, spelled ATXMAYUR. Shout out to ATX Mayor for plugging his property, by the way. Let's fuck it, let's pull it up. Let's take a look at it here. Let's see if we're gonna pull up this property and comp it in real life and see if it's priced right. The property is at what's this? 10,101 Woodhaven Drive in Austin, and 78753. As we're loading up here, I like it. I feel like I'm somebody in the news. It takes a second for the people to come on and go from there. Man, we got Angie Knows Austin. Angie, thanks for jumping in here. We got Superstar Services. We're going to talk about a bunch of stuff today, but we're going to go ahead and look at this property that was just sent over to us and take a look and see what we got going on. Griff, what's good, man? We got 12 Rivers Realty in here. Oh, here we got Woodhaven. It is a 1,826 square foot, 3-bedroom, 3-bath. Looks like they converted the garage. Looks like this has been flipped, right? And photos look good. Priced at $525 for a 3-bedroom, 3-bath. And now understand with a converted garage, and this is what's going to be interesting in this case. And guys, this is something that's good to know too, is when you are pricing property with a converted garage, a lot of times it's easy to kind of get caught up and think, okay, I'm going to go ahead and price this as if the garage isn't converted, right? So if you've got a 1,800 square foot, let's call it 3.2 with a converted garage versus one that doesn't have a converted garage, you can really take a hit on your price per foot. And sometimes a trap that sellers run into is saying, okay, I'm going to sell this at a price per foot at this, whatever that is. And a lot of times you end up taking a hit for a converted garage. ATX Mayor, not trying to shit on your property. I'm just telling it as it is. So let's take a look at this. But who knows? It might be priced to sell, in which case, somebody out there should buy it. Let's see. And this is in Windsor Village. And let's see here. 1,826 square foot on the market, 287 a foot. Looking at those that have closed versus pended. And by the way, shout out, I don't know if you guys know this, but the MLS now essentially goes, we've got Houston and San Antonio now. So looking at all these different comps and whatnot, because there's not a lot that have actually traded in this specific subdivision. A lot of times on the east side, the subdivisions are, maybe 30, 40 homes. So I'm going to go ahead and open this search up a little bit more to try to pull some better comps. Because it looks like this property has been on the market 36 days. And so it's going to kind of be interesting to see where this ends up based on, based on how it's listed now. And so this is up off of 35 Palmer Lane, kind of Tech Ridge area, Harris Branch, Walnut Creek, Pioneer Hill. So let's see. Widening the search up just a little bit and pulling out the actual subdivision. And let's see. Well, we got a little bit more properties there at that point when we did that. So that is good. We will do properties built before 2020, just so that way there doesn't pull anything that's brand new. And cue this up a little bit. And what I'm trying to do right now, guys, is trying to go ahead and bring in the shot group a little bit, right? My area was so wide that I had too many comps. And so then what I'd prefer to do then is kind of have it be closer. So that way there we can actually compare apples to apples versus just saying, hey, there's, all these different kind of micro subdivisions up there. And so we want to make sure that we are pulling from the actual subdivision versus different ones, say with different builders and whatnot. Also, this property has been on the market for, looks like 36 days. So if they haven't already, my assumption is that there's probably some sort of a price reduction coming between now and then. ATX Mayor, have you guys, let's see what you guys came on at and kind of see where it is, right? So, man, in this pocket, you've got homes, that are kind of trading in all different price points, as there's different, there's homes that are built in all different times, whether it's in the, like, say, 70s or 80s and even 90s, and even some newer stuff too. And, kind of looking at, this area, this property on Woodhaven is listed at 525. And then there's three others that are listed. One's at 550, 595, and 649. But then really, I think it's very important to look at what's actually sold when it comes to comping it. It also separately, there's 24 active, and we've got, what's this, 5 pending, which would indicate almost 5 months supply. So really that's still in this, if priced right, would be, certainly considered a, kind of a soft seller's market. Definitely not something that is going to be a strong seller's market, but it's still kind of going that way. What I will do though is put 0 garage spaces in there, and all of a sudden now we're looking at 3 comps, right? So that's what the thing that I think is super important. And so looking at properties that have 0 garages, right? So now this is all converted garages, which is really kind of apples to apples at that point. This is one that is not maybe flipped as nice, but over on Village Green, currently listed at 310. It's 1,580 square foot. So this one on Woodhaven is obviously significantly, nicer as far as that goes. But here's another flip. This one was listed at 365, right? So let's see how close these are to our subject property. Yeah, they're all really close. I would say this shot group is probably, within street. So I would say this is a very similar product, listed at 525, where others that also do not have converted garages are listed significantly less, like 150,000 less. And I think this is something that sellers can fall into, this trap of taking your converted garage square footage and treating it as if it's another, say, 1,800 square foot home, when a 1,800 square foot home with a 2-car garage versus an 1,800 square foot home with a converted garage, it just doesn't feel the same. And unfortunately, that's something that may or may not be happening here. Either way, man, it'd be interesting to see kind of where you end up on this as far as pricing goes. But looking at these comps and whatnot, the things that are, currently active are significantly cheaper. So if I'm a buyer looking at this and I'm bringing my buyer, you've got three bedroom homes without garages. Here's one 1,830 square foot that was listed at 474, and it ended up closing for 525, or sorry, 425. Correction, 425. And this is a dope flip. It's real dope, actually. Also converted garage, though, right? So similar square footage. So it fits me. And man, ATX Mayor, I hate to say this, but if I was your agent, I'd be looking at this saying, man, you need to price at 450. I think time will tell. Obviously, hopefully I'm wrong, because it's your money, not mine. But you're the one that put the property in the you're the one that put it in the comments, and so we just looked at that. So shout out to ATX Mayor. If anybody wants to take a look at this property, it's at 10101 Woodhaven. May or may not be overpriced, but kind of is what it is. That's the first time we've done like a live comp on the property here. So on stream. Yeah, shit. Hopefully I didn't just botch it and screw this guy up. Yeah. Sorry, bro. Either way, you know what? Figure it out. There's a lot of shit happening in the world right now, huh? What are we on, day like 36 of the government shutdown? And you know who I don't fault? The TSA people in Houston. I'd have just been like, fuck it, I'm out. This is too much. And then just gone and got a new job. How many people? I want to know, how many people do we think are actually going to come back to their jobs after this? I think there's going to be a pretty big attrition of people that bounce. Let's see. Morgan Stanley is talking about humanoids, a $5 trillion market. Dude, this is crazy. I think Elon was talking about how basically like Tesla's potential in humanoids is significantly more than anything else they're doing, like in the battery business and everything else. And this is going to be the future. They have that humanoid that NVIDIA just did at CES. That was really dope. I don't know, guys. What do you think? At some point, are we going to hit like an iRobot situation? What?
You can buy them now.
Oh, yeah, okay. Because you said you could buy people. I was like, I don't think you could do that, but you could buy humanoids. Oh yeah, dude. I don't know if you guys have seen. There was was it the Rizzler, or that robot that was at the one that was at Yellow Rose, and it had the cash gun and stuff like that. Dude, that's hilarious. I honestly, if I had one of those, I would probably do that. That is a good use of humanoids, apparently, for sure. And guys, if you don't know what you're watching right now, my name's Paul Smith. This is the 12 at 12. We're just kind of doing an AMA, kind of just talking about whatever real estate related. Dude, this is an interesting one. I read this today. The homeowner equity boom is over, but a troubling metric is the homeowner equity boom is over, but a troubling metric is inching up. And so what they're talking about here is homes that are potentially underwater. And underwater means that somebody owes more on the property than it's worth. And for those that have been in the real estate market not too long, there's things called short sales, which basically means that you're asking the bank to accept less than what's owed on the property. On the agent side, it's kind of a pain in the butt because there's a bunch of things that you have to do to be able to get the home to qualify for a short sale. And then you're negotiating with the bank at that point, and the bank is really dictating the terms. God, I hope we don't get to that point. But, interesting is what I want to see. And as I was kind of on my morning walk, I was reading this. And this is saying basically equity rich homeowners decreased to 46%. In other words, homeowners that have significant equity are at 46%. And that's in Q3 of 2025. Seriously, underwater mortgages increased to 2.8% in Q3. So what I want to check right now is what was the seriously underwater mortgages in 2008 and 2009? And so this to me, I think will help. This will kind of give us perspective, right? At the end of the day, is like this is, at least since I've been in real estate, 2008, 2009, the mortgage meltdown, that was probably the worst time that I had seen kind of real estate and everything else, and people being upside down. So let's see here. In 2008, the percentage of seriously underwater mortgages where the homeowners owed at least 25% more than the home's value was not as high as the percentage of all mortgages in negative equity, obviously. By November 2008, the total number with negative equity had risen to 12 million, representing about 10.8% of all homeowners. So think about it. Back in 2008, it was at 10.8%. Right now, this is saying it's at 2.8%. So we're roughly about, what is that, a third to a little bit more. So we're about a third of what it was in 2008. So interesting to see kind of where that is. It says Midwest has highest equity rates. South most underwater has the most underwater properties, right? And so that makes sense. When you're looking at it as over the past 5 years and kind of modeling it out that way, we had the biggest swing. We had the largest amount of equity from, home prices that just shot up that have also come down. And actually, I want to talk about that real quickly. That kind of gives me a thought. I'm seeing a lot of agents talking about how the Austin market is down 23 to 25% from the peak. And I think there's a couple things there that I want to make sure that people are pointing out. One, we need to be adjusted for seasonality. So typically homes that sell in May and June, they tend to be larger homes, right? That's when families are moving, so they need more square footage. So at that time frame, you'll typically have the highest median price. And right about now is when you have around the lowest median price, right? That's because typically in October, November, December, January timeframe, families aren't moving as much, right? So one part of it is seasonality. Two, so what I would want to do is say, let's look at apples to apples, right? So let's look at January of 2020 to, let's call it January 2022 or 2021 all the way to 2025. And I say that because, because this is really what's important, is that people are talking about how from the price or from the peak, prices are down 23%. But 2 years ago, they were down 20%. So really, if you look at it over the past 2 to 3 years, we're down anywhere from we're either up a point to down, I would say 3 to 5% over the past 3 to 5 years. And so we were already at this level. So really what this indicates to me is that we're at a market that's actually kind of bottomed and or flat versus a market that's continuing to take a deep dive down, because that deep dive kind of off the cliff really happened in 2023 and 2024. And it's kind of been flat since then. Home price in Austin. And so I think the main thing is that people are kind of grabbing headlines right now saying stuff like that, but really the values had really kind of taken that hit, right? So in median home price in 2020 was basically 300,000, and then 2021, it jumped up to 518,000. 2022 was 575. That was the peak, right? And then 2020 from 2022 to 2023 it was 525. So that's 10% right there, right? And then from 2023 to 2024, that was where you had kind of that biggest hit from there, right? Because a lot of the stuff, a good amount of this stuff, unfortunately for a lot of people, property wise, closed in 2023 that had gone under contract in 2022. So they were still paying 2022 prices as they were building stuff out. And so that's why that kind of valuation kind of held where it was at that point. But if you're looking at it from 2024 to 2025 projections, it's about a 2% difference there. So really that's where you start to see that bottoming. And so the bigger headline to me would have been in 2024 when they're talking about this from the peak, right? That is the bigger headline, where it was 575 minus 440 is 135,000. That ends up being 23%, right? So that's the same amount as it was last year. Essentially, just says 25% now. But I don't know, why is this making the news cycle now, and why didn't it make the news cycle last year? That's the question I want to know, right? Because a lot of people are kind of getting a little bit clickbaity talking about how the market's down that much. I would like to kind of shift it a little bit to be like, hey, look, the major hit was last year, and now we've kind of trudged through that. Specifically, if you look at all the different metrics that were happening within the market, 2024, dude, there was a stall in the market while while the election was going on. I don't know if you guys remember this or not, but when typically uncertainty is something where it's an opportunity to make a lot of money if you have the balls to pull the trigger. But at the same time, if you don't, it causes people to have analysis paralysis and they're not sure what they're going to do. So in that case, I think that's why you saw that biggest jump essentially from 2023 down to 2024. And then also at the end of the year, the Fed started to lower interest rates. And that's a big thing because that starts to build confidence in the market. That means that companies are going to be spending more, means that the Fed is starting to go towards going away from quantitative tightening to hopefully quantitative easing at some point, which will then even lower interest rates even more than that, right? So totally makes sense at the end of the day, right? Because rates went from people being able to get a 3% rate to getting a 7 or 8% rate at one point. So I'm actually surprised that the prices didn't drop more, because if you think about it, for every point in real estate with your interest rate, it means that you can afford somewhere between 12 to 14%. So with rates being as crazy as it was, shout out to Audrey, by the way, Audrey Sales. Thanks for jumping in here. Hope you've been well. Audrey, your social media is killing it, by the way. Keep it up. If you think about that drop, to me, that's the story. And it should have came out last year. To me, the story now is I think the market's bottomed. We're down 2%. So if you take that over the past 3 years, being down 2% versus 10%, and then another 13, 14%, that feels a little bit better. I don't see the market dropping another 10%, but if it does, I will be buying a lot of real estate at that point. I had read a stat, and it was probably in 2024, that said if the Austin market was able to deliver product at 70% of the value that it was then, that would free up about 220,000 buyers, because there's a lot of people that want to buy. They just, because of interest rates or home prices, they're just not able to do it right now. But I'll tell you what, there's a lot of deals out there. And that's the thing, is making sure that you're working with somebody that can find those deals. Let's see. We got Selma here saying that only matters if you have to sell, right? If you're going to live there, wait it out, not an issue. You're absolutely right. Thank you, Clarissa, by the way. I got finalist for Platinum Top 50. Looks like it's happened a couple times, but the only matter if you sell, dude, you're absolutely right. It only matters if you sell. You have to write the check if you're upside down, if that's the case. Thing is, though, with those properties, it's still probably cheaper to hold those properties now because of your interest rate if you're underwater than it would be if you were to buy that property today at a less interest rate. At a higher interest rate, but at a less value. Your cost to hold it would still be more. So those that bought in 2021, 2022, their payments are less. But God, if you have a life event, that's what happens, right? All of a sudden, life happens, and that's another lump you would take, basically, as far as trying to exit, is you'd have to exit either one, not making any money, or two, hopefully not writing a check to get out of it, because that would definitely suck. Let's see what else we got going on out there. And guys, again, this is Paul Smith with your 12 at 12 over 12 Rivers Realty. Oh man, dude, this is a tough one. Good friend of mine, we actually used to be in fantasy football league together, kind of from the bar days. A good friend of mine, Matthias Segura, is now basically the superintendent for Austin schools, which that's got to be a tough job right now for sure, right? Because you're looking at budgetary cuts and everything else and all these things that are kind of happening within Austin AISD. And on top of that, like, people they don't want their taxes to be raised. So you've got somebody that's kind of feels like he's up, almost like a rock in a hard place, right? They got to make cuts because they just can't continue to do what they're doing. But at the same time, that's not an easy thing to decide on and really do there. So, man, Matthias, hope you're doing well, man. I can't even imagine how tough your job is right now with AISD and deciding what schools to cut and which ones not to. I think I was just reading something that they're actually going to keep 3 open. So AISD to close only 10 schools, in abandoned attendance boundary changes. So I'm wondering kind of what the what the basis was on that and kind of why they did that. But either way, closing schools obviously is really tough, and it's like really, really tough if you think about it, because people don't want to raise their taxes, and at the same time they don't want to close schools. So what's the where's the give and take there? Um, I don't know, but I'll tell you what, I'm super glad that I'm not the one that has to come up with that. Glad I don't. And guys, that's our time today, by the way. So thank you again for tuning in to the 12 at 12. If you guys have any questions, please feel free to hit me up. Y'all be good. Peace.